Yes, welcome back. We are going to solve question number 6. So you please take your textbook and look at your textbook. Following information is available about the business of a firm. Profits in 2016 40,000, 17 50,000, 18 60,000. Non-recurring income of rupees 1,000 is included in profit of 2017. Profit of 2016 have been reduced by 6,000 because goods were destroyed by fire. Goods have not been insured, but it is thought to insure them in future. The insurance premium is estimated 400 per year. Reasonable remuneration of the proprietor of business estimated at rupees 400 per year. Reasonable remuneration of the proprietor of a business is rupees 6,000 per year, but it has not been taken into account for calculation of the above mentioned profit. Profit of 2018 include 5,000 income from investments. Goodwill is agreed to be valued at a 2-year purchase of the weighted average profits of the past 3 years. The appropriate weights to be used are 16.1, 17.2, 18.3. They are asking to find out goodwill. Goodwill is agreed to value 2-year purchase of the weighted average profit. Okay, this is the question. And here some 1, 2, 3, 4, 5, 6 items are given in bracket. This is we need for calculating normal profit. Okay, so it is better to read the question one more time. You can pause the video now and you can read one more time. Then only you can understand properly. I am going to that solution part. It is a question number 6. Question number 6. The given profit year 3 years profit only given, that I already written here, that you can see. Then year profit also given. Now I am going to the adjustment. You see the textbook, the point I am telling. They are the second point. Non-recurring income 1,000 is included in profit of 2017. So in this year 1,000 income is included. That what is that one? Non-recurring income. So this 1,000 is included in this profit. We need to minus that 1,000. Okay. Then third point. Profit of 2016 have not been reduced by 6,000 because goods destroyed by fire. So goods destroyed by fire, have been reduced. Okay. So it is abnormal loss. Abnormal loss is affected this year's profit. We need a normal profit, means a profit without affecting any abnormal things. To get that, this is 6,000 we need to add. Now fourth adjustment, goods have not been insured, but it is thought to insure them in future. So this is a future expense. Future expense insurance premium is a future expense. How much? 400 per year. So this 400 we need to subtract from every year, because in the future we need to insure it. So in this profit this insurance premium is not coming. That is why if insurance premium is charging, what will be the profit? That is why 400 we are deducting from every year's profit. Fifth one, reasonable remuneration of the proprietor of business is 6,000 per year, but it has not been taken into the for calculation of the above mentioned profit. In this profit, that remuneration to the proprietor, that is a reasonable remuneration to proprietor, 6,000. 6,000 is not taken. 6,000 is an expense. So in the future, this is 6,000 we need to consider, and we are calculating the goodwill for the future purpose. That is why this is 6,000 also we need to subtract from every year's profit for getting the normal profit. Future expecting expenses we need to subtract. Do you remember in the first day itself I told this is a future expecting expenses, and this is 400 also future expecting expenses. Then we are moving to the sixth point. Profit of 2018 include 5,000 income from investment. 18's profit. So here 5,000 income from investment, it is a abnormal income. this is already included in this one, we need to subtract. So 1 minus 5000. After this all the calculation, what is the normal profit is coming, we need to find out that. Okay, so here 6000 we are adding and 6000 we are minusing, effect will be 0. Then 400 we need to subtract, then it will be coming 39,600, normal profit of 16. Then in 17, 7,400 we need to subtract 7,000. So 42,600 is coming. We can check one time. 50,000 minus this total is 7,400. It is coming 42,600. Then 11,400 we need to subtract from 60. So 40, 11. So 48,600 is coming. 48. We can check it. 60,000. 60,000 minus 11,400. 48,600 is coming. Now the weight which is given in the question I have written there. Then 48,600 into 3. It is a 1,45,800. Then 42,600 into 2. 85,000. Then 39,600 plus 39,600 plus 145,800. Total is coming 2,70,600. Total weight is 6. This I divide by 6. 45,100. And here the goodwill is how many years purchase? Goodwill is valued at a 2-year purchases. Okay, this one. Goodwill is valued at a 2-year purchases. So what is the this 45,100 is what? 45,100 is this is the weighted average profit. This into 2, that will be the goodwill. So we are getting 90,200. This is the answer is given in the textbook. Okay, so this much only I solved. You have to find out a weighted average profit. Next line you have to find out a goodwill. We will get the correct answer. Okay, question number 6 is over. Then we are going to question number 7. 7 also I will read one time, but one time reading is not enough. You have to read 2 or more time. Okay, when we are understanding properly, till that time you have to read question number 7. Okay. Calculate the value of goodwill on the basis of 3-year purchase. 3-year purchase of the weighted average profit of the last 5 years. Profit to be weighted 1, 2, 3, 4, 5. The greatest weightage to be given last year. So this 5 we are giving this one 2019. Okay, like that. Profit of the last 5 years were 2015, 16, 17, 18, 19. Here 80,000, here 1,05,000, here loss 20,000, and here 1,80,000, 2 lakh. And in 16 and 17 something is given the bracket. It is saying that after considering abnormal loss of 41,500, after considering abnormal gain of 40,000. So this 2 years of profit is affected by abnormal things. Then books of account of the firm revealed that closing stock as on 31st March 2015 was overvalued by 40,000. One adjustment. Another one. Repairs to machinery 60,000 were wrongly debited to machinery accounts on 1st July 2017. Depreciation was charged on machinery at 20% per annum on the diminishing balance method. So this is 2 adjustment we need to consider, and this is 2 also we need to adjust it to get the normal profits. Okay, if you did not understand the question properly, you can pause the video and read again to understand this answer. Okay, this question. So I am going to the answer part. Question number is 7. Year 2015, 16, 17, 18, 19, 80,000, 1 lakh, 5,000, 20,000 loss we can put as a minus, then it is a 1 lakh 80,000, then 2 lakh. Now we are going to the, and this is the year given profit. Now this is the adjustment. This will be normal profit. Normal profit or loss. Okay. This will be weight. And this is weighted average profit. Weighted average profits. Now the adjustment. First of all, 2016 it is given after considering abnormal loss of 45,000. So because of that loss, this year's profit is reduced. We need to add that one. So 41,500 we are adding. Next one, after considering abnormal gain of rupees 40,000. So this is included in this we need to subtract. Now we are coming to that one paragraph is given, a books of account of the firm revealed that point we are coming. Closing stock on 31st March 2015. So it is coming this year. Closing stock was overvalued by 40,000. So do you know what will happen if a closing stock is overvalued? This is the trading and profit loss account. Closing stock we are taking this side. Suppose here closing stock, the correct figure, here it is given how much difference? 40. Okay. Suppose the correct amount of closing stock was 1 lakh. 1 lakh is the correct amount. And instead of that, if we took a closing stock value 1 lakh 40, then what will happen? 40,000 rupees more we return. That is saying in the paragraph, it is saying that closing stock was overvalued by 40. So with the 40,000 the closing stock is more we recorded. Because of that, this year's gross profit is increasing. Instead of 1 lakh we took a 1 lakh 40. This is the income side. This side is the expense side. Purchase is the opening stock, that is things we are taking this side. So whenever we are taking here 40,000 rupees more, instead of 1 lakh 40,000 when we return there, we will get 40,000 rupees more profit in the same year. That is why 40,000 we need to subtract. Okay. So once again, which year it is given? 31st March 2015. In this year, closing stock, that is why 40,000 profit we got more, that we have to subtract. And one more thing. Now I told about 2015. Then in 2016, what will happen? 2016, previous year's closing stock, that is 2015's closing stock, we are taking as an opening stock. And instead of this 1 lakh, we will take this 1 lakh 40,000 rupees here as a opening stock. Then what will happen? Actual figure is for 1 lakh, but we are taking in the expense side, we are taking 1 lakh 40, means this year's profit is reduced. Gross profit is reduced because instead of 1 lakh we took 1 lakh 40,000 rupees more we took on the expense side. That is why we got 40,000 rupees less only, so that we are adding in the next year. So here we need to add that 40. So closing stock will affect 2 years. One is on the same year, and next year this is becoming an opening stock. So 2 treatment is required for that. Then that is second point. Repairs to machinery 60,000 were wrongly debited to machinery account. We know when we are spending any repairing charges, it is a revenue expenditure. It should come in the profit loss account. But 60,000, that which year it is? 1st July 2017. That is why it is affecting 2018 only, because 17 when this is this machinery is repairing is happened 1st July 2017. This is which day? March. So after March only July is coming. So it is affecting this year. Then this year what happened? 2018 year what happens? Repairs to machinery. Actually 60,000 was repairing charges, but they have taken it as a machinery account. That is why it is not coming in the profit loss account. So 60,000 we need to minus, because repairing charges, it is an expense. This expense is not yet taken. It is taken as a asset. That is why 60,000 is not deducted. Then another thing, for the 60,000, by considering it as a machinery, they have reduced 20% depreciation. That depreciation we need to find out. That will be value of asset is 60,000. Value of asset 60,000 into 20%. This is for 1 year and it is from 1st July. So April, May, June, 3 months are over. So 9 months is remaining. So this into 9 divided by 12 we will get 9,000. Into 9 divided by 12 we are getting 9,000. 9,000 depreciation is already charged. That is we need to add. 9,000 depreciation already charged, we need to add it. Okay, understood? Because they treated it as a asset, and for the asset we charged 9,000 rupees depreciation. So this 9,000 we need to add, and it is the repairing charges. That is why it is not taken. 60,000 is not taken in the profit loss account debit side. That is why when we are taking this year's profit will decrease. So that is coming. And one more thing, this next year also, this asset machinery we consider repairing we consider as a asset. That is why this will continue in the next year also. So next year 60 minus 9, the depreciation method, what is you see, what is the method of depreciation? Diminishing balance method. According to diminishing balance method, second year's depreciation will be 60,000 minus 9. The diminished value is 51,000. And next year definitely we have reduced the 51,000 depreciation. 51,000 into 20%, it is coming 10,200. So 10,200 depreciation they have subtracted. So this we need to add it. Now all the adjustment is over. We have to, after adding and subtracting this all the figures, the normal profit it will come. Okay, then that we can see. And here 80,000 minus 40, it is coming 40,000. Then 1 lakh, both the amount we are adding. Okay, 1 lakh 5 plus 1 lakh 5,000 plus 41,500 plus 40,000 is equal to 1,86,000. Then 20,000 minus 40,000, it is coming minus 60,000. Then 1,80,000 minus 60, 120, 129. Then 2,10,200. Then the weight, this is the first year 1, then it is a 2, 3, 4, 5. Then last year's 2,10,200 into 5. So we are getting 10,51,000. Then 1,29,000 into 4, 5,16,000. Then 60,000 into 3 minus 1,80,000. Then 1,86,500 into 2, 3,73,000. This is 40,000. Now listen, these two columns total you need to take, last two columns total. So this one, this column total is coming 15. This columns total you need to find out, and weighted average profit will be what is coming the total divided by 15, that is the weighted average profit. And in the question it is saying that a goodwill will be 3-year purchases. So what is the weighted average is coming, that you multiply with 3, then the answer will come. Okay, so question up to question number 7, this is over. Then question number 8, that is another type of calculation that you will study through next class. Okay, so this much you complete in your copy. Thank you.